frame. What I'm about to teach you, you can apply to investments. How do you know when to protect your investments? I'll teach you how to do that. How do you know how to day trade, how to swing trade, how to any time frame type trading? I'm going to teach you the basis of how to do this. So it applies to everyone across the board. So at the end of this, you'll say, wow, I know how to day trade. I know how to invest. I know how to do these things because it's all the same. The markets are the same. You can apply this knowledge to any strategy. It is not strategy dependent. Okay. So again, if you have a gap and go day trading strategy, you can use what I'm about to teach you to help you be more efficient with that strategy. If you want to use the Momo, you can use Momo to apply this and make better returns because you'll know when to get in bullish, when to get in bearish, how to get out, get in early, all that good stuff. Okay. This is the basics of how the markets move, and it remains the same year after year. My friends, this is not going to change. This is not something that works this year, but won't work next year. The markets have been moving the exact same way since the beginning. They've always moved in the S curve. So it's never going to go out of style. Okay. Let's jump to the next one. Okay. So what is an S curve? A bull S curve is going to look like this. There's your bull S curve. It continues. It's a repeating pattern that continues to repeat until the bull move is over with. All right. What is a bear S curve? It's the exact same thing, except repeating back down. Okay. That's what this is. So when I say a bull S curve, it's something that looks like this. When I say a bear S curve, it's something that looks like that. Okay. Good stuff. Let's jump on to the next one. There are 3 parts to the S curve. Okay. You have part 1. And this is just the basics of an S curve. We're going to dive in here after these basics and get to the real meat of how this is going to help you out. But you've got to understand this first. Part 1 is simply, this is an example of a bull S curve. You have a move up. Part 2 is a move back down. And part 3 is the move back up, which again is part 1, right? So because the next phase on this is a pull back down and then a move back up. Starting to get it now. This is how the markets work. So let's look at how you can apply this. Okay, let's look at some charts. This stock, I know it's small, but this stock is rampaging bullish. Absolutely just screaming bullish. Every new trader in the world, and I'm sure everyone's done this. I've done this. Jeremy Newsom's done this. Every one of you at some point in your life has done this. You see a stock that's just going to the moon. And what do? You get in because it's bullish. Right? Clearly, this is bullish, going straight up. Get in. What do experienced traders do? They wait for the pullback. Why would you wait for the pullback? Remember what we just talked about? What phase is this bounce in? Phase of the S curve. Remember, you've got 1, 2, and 3. We're in phase 1. So what is guaranteed going to happen? Phase 2. That's right. Guaranteed this will pull back. The question now is, how far is it going to pull back? We'll dive into that